Summer trading is one of the most misunderstood periods for futures day traders. You open your charts, volume's really low, follow through is weak, and suddenly your reliable setups start chopping you up. Why is that? Because summer markets are different, right? Not broken, just slower. Big institutions, they scale back activity, traders take vacations, liquidity thins out, and changes the rhythm of the market. If you're trading in the summer, like it's Trump tariff season, well, you're setting yourself up for frustration. So let's talk about how to actually survive and thrive in the summer months without over trading and overthinking it. Let's dive right into this video right after this intro, and I hope you guys enjoy it. Now, some of the precautions that we have to understand for summer trading, right? Here is a general list of them. We do want to reduce our size. Less volume means generally choppier moves. I don't want to sit there and increase my size just to make my profit goal because my risk is increased and things might not move for hours. I really want to lower my trade frequency as well. There are going to be fewer high quality setups that form, and our patience is really going to be tested and it's going to wear thin. Now, in summer markets, things can get extremely choppy and it can take hours for a trade to set up. However, the areas are still going to hold consistent. It's just the actual identification of the entry and the move into the area that you want to trade is going to be that slow that it's really going to get traders to second guess if that trade's even valid. You also want to risk smaller per trade. Now, volatility can fake you out a little more in general, and when there's low volatility, it can make traders really second guess. So in the summer, my general goal isn't necessarily to push and make the most amount of money as a day trader in the futures market if the volatility isn't there. Now, there are periods obviously in the summer, like any other time, that volatility does ramp up, and that's when you want to step on it. You also want to be okay with sitting out. For me, no setup equals no trade. There could be some days where nothing really sets up and we might be sitting in front of the screen for 4, 5, 6 hours until finally something comes about, and that's the time to strike. Otherwise, if there's nothing that's very concrete that really sticks out in a summer period, you can take a trade, take the loss, and nothing might come out for the remainder of the day. So summer isn't necessarily the time to push size. It's the time to protect capital, sharpen your edge, get a better understanding of how you're trading, your execution, right? Slowly build up from there. Less volume is generally a period of less conviction and less clarity. So you want to adapt, you can cut size and slow down your trades, and most importantly, wait, right? This is going to be a huge test of patience in the summer period. Not every day in the summer is a trading day, right? And that's okay. You might want to touch grass more often than not. You want to protect your capital so you can attack when the conditions do improve, and if there's opportunity and volatility throughout the day, that might change, especially around earnings seasons, which is coming out right now, or maybe some kind of other news, some kind of tape bombs, the Fed, Trump, whatever the case is. You want to keep your ammo for those periods because some days, right, we open the S&P 500 with 100,000 contracts traded at 9:30 a.m., so on the overnight session, meaning that no one's trading the overnight session. Generally speaking, I'd like volume into the open about 200,000 contracts. So if I'm trading 100,000 or even less than 100,000, that's pretty much the equivalent of half days when the market closes at like 1 p.m. Eastern time. So in the summer period, right, since market conditions change a little, the question is, should you change your strategy? The answer is it really depends on what kind of strategy you're using. Now, I don't necessarily change my strategy. Instead, I refine my execution. I think refining execution, the way that you approach the markets, is going to be the key change in the summer period, instead of completely changing how I trade. Now, again, I said it depends. Now, breakout traders, they might have to take a deeper look into their system and what it entails, because these follow-throughs, these larger expansions, these heavier moves are less drawn out in the summer. Now, one of the other things is assets. When you're trading in the summer, there are certain assets that might move a little more than others. Now, equities tend to be a bit sleepier, but things like gold and oil might have a little more movement, so you might want to explore other assets. If we're in the equity space, now I'm predominantly like 99.999% an equity trader, S&P and NASDAQ, but S&P, for instance, it's a very slow and tight moving market. You'll get like a few points here and there. So looking at something like NASDAQ, reducing my size, reducing my risk on the trades, and still being able to get 30, 40, 50 points on a summer day trade is still a huge, huge plus and a great opportunity. So looking at different assets can really, really help and change the way that you perceive the market, instead of sitting there frustrated and thinking, oh my God, this thing's never going to move. I've sat here for 5 hours and nothing. You want to focus more on the selectivity, the patience, and the mental clarity. So realistically, building out a whole new system for the summer, I don't think that's necessarily the case, right? There are a lot of traders that completely take the summer off and then they start from pretty much ground zero back in September and October when things start picking up again. So at this period, I just want to stay fresh. I want to keep warm. It's like being a bench player, right? I want to keep warm just in case I'm that sixth man that needs to come off the bench at any given moment. So I really want to keep those reps in. I don't want to deviate too much. I don't want to look away too much, but I really, really want to be selective and patient. If your strategy is built on something like auction theory, market structure, context, order flow, right? It'll work in generally any condition. You'll have the same principles, especially with auction theory in any conditions. There are some changes in order flow where things start to die off a little more, so you have to be a little bit, I guess, cutesy with that. But your size and your expectation and your execution is generally what changes. I don't trade any differently. I just slow it down. I try to cut size, and I accept that setups may come once or twice on a day-to-day basis, and I really want to make those count. Right? Consistency isn't about new tools. It's about adapting your behavior around the same edge that you've built up to get to where you're at. So me trading the summer markets, how I trade. My strategy, it generally stays the same, right? Predominantly auction market theory based. What we have here on the screen, we have the volume profile that's just blasting in our face on NASDAQ, and order flow. Now, from the order flow perspective, I haven't really changed anything. I've kind of moved away a little bit from the DOM, especially in the summer markets, and focusing on something that really, really validates imbalances from an order flow perspective, like the delta profile as well as the footprint. So the general things that change are a reduction in size, so I don't want to trade too much. I want to crank up my patience, and the expectations are really, really pulled back, meaning that I want to be very selective. I want to limit the amount of trades. So on average, if I'm doing 5 trades a day normally, I want to drop it down to maybe 1 or 2, which has been recently the case in most situations. When volatility arises, then you can maybe crank some things up. Some days, there's literally nothing to do. Step away from the screen, go touch some grass. The market's not going anywhere, right? You don't have to be here every day. Even if you miss a monster move, oh my God, NASDAQ's moved 200-300 points today. The S&P's moved 60. It's not the end of the world, right? There's going to be more of those. You've missed way more trading days before you started trading than anything. So generally, summer markets, they move more sideways, right? Meaning that you have a lot of range days. You have a lot of slow movement, right? With the odd trend day here and there, and even that's a mix. Even when there is a trend day, it generally happens in the first hour of the session, right? The largest move generally does happen within the first hour of the session in a summer market condition. And then the market starts to slow down, rotates, chops sideways, and you're like, holy crap, I just missed that massive move. Now I'm stuck in this chop. Not necessarily. Even in the chop, there's still opportunity, and things hold out in a general understanding of volume, right? Volume principles stay the same. So the ranges, they do become smaller, expectations get smaller and tighter, and I can drop my stop a little for that. Because if my expectations normally on NASDAQ, I'm looking for 50, 60, 70 points, which would be a normal move, right? In the summer, I'm looking for 30, 40, right? Even 25. Well, that then tells me that, you know what, I can cut my stop down as well. Now, not much changes the way that I trade. I'm either looking for a pullback or general turning points, which are labored and do take a long time. So if you're impatient, this market can really wear you down and beat you down. On average, my trades, winning trades in the summer, are between an hour and 3 hours. And that's not because I'm looking for this monstrous expansion and this huge extension. I'm just simply looking for a 2-to-1 plus risk to reward, and markets just don't go anywhere. So in any given day, I can expect 1 to 2 solid opportunities to set up base around my system, which means that I want to take them if I want to trade on that day. So I still want to trade based on auctions with 2 general things in mind, right? I want to really, really make sure that I understand where my balances are. where are my key auctions, where are these major areas, because these monstrous balances that we've just drawn here on the screen, the extremes of either of those are going to be the highest probability levels that I have to trade on a day-to-day basis. Now, as we're trading into all-time highs, right, the information is still developing, balances are still developing, and we can find some other areas potentially, right, within these larger balances, but I really want to take that with a grain of salt. I mainly want to trade the key auction extreme. So two things to keep in mind. If I open inside of a major balance, right, so if I open inside of a major balance, meaning like this ETH going into this day over here, right, this ETH going into this day over here, for instance, this ETH probably going into the current market open, I can generally expect that balance to hold out and then we can range. So like this day, we get a little drop and the markets just range within the balance. This day, we do get a little push to the upside and then they end up ranging into the day, right? After a trend day move, it just ranges the rest of the day. So I'm generally looking for a balance to just hold if I open within it. If we open outside of a major balance, I can expect a trend day, but I don't necessarily expect that it lasts too long, right? It usually happens within the first 30 minutes, hour of the session, and it dries out into the afternoon where it ranges for the majority, and then it just stops. So meaning both do have opportunities to pull back in the direction of the move. They have opportunities to reverse, right? But they're very, very limited and low. So what's the goal of summer trading realistically? The goal of summer trading isn't about blowing the doors off. It's about preservation, refinement, and staying sharp. My goal is to stay consistent, stay patient, be ready for when the market actually does pick up, for volatility coming in. Because when volatility returns and liquidity comes back, you want to be mentally fresh and technically ready to really step on the gas. Because the worst thing is having to adjust into a summer period and then having to adjust into a higher volatility period, then keep adjusting back and forth as volatility changes. That's awful. But if I'm ready and I'm sharp, even in slower periods, I can quickly adjust into more volatile periods in a very short amount of time if I'm still putting in the reps and I'm still sitting here. One of these trading days this past week, to start Monday off, I had one single trade and it came around 11 a.m. Eastern time. So that was it for the remainder of the day and the market didn't do anything. So this is a day in itself, right? This is the whole day over here in the darker blue. What happens on this day is that markets, they catch a bid right off the open and they shoot up within the first 30 minutes. That's typical when we have a trend day. The first 30 minutes, hour, you have that larger expansion, and then from there we can get a better understanding of what's going on. After that, when it starts dying out and the volatility really drops off, you expect a general range. So what did I do? I just bought the pullback into a key area based on that individual day, and that was it. Just one single trade. I missed this move, so obviously I'm not on it. There was no pullbacks. It just continued on the way up. And how I broke that down, right? Even if we're trading into all-time highs, we can still gather the information based on the individual day as the day shapes up. So this is a distribution area that we had, right? We broke through the top band of it, which was the prior all-time high on the NASDAQ. Right, this was the prior day session over here. We have a key auction ledge as well within the distribution area. And my thought process was, you know what, like as long as we're trying to hold above this, hold above this B-shaped profile, I want to buy. The only setup that I had, right, because when I'm creating my trade plan, I have 1 to 2 setups that I want to take on the day. The only setup that I had was try to buy 240. It pretty much bid right off the open. So what can I do after that? I can't really do much. I have to wait and see what goes on. Once the actual profile shaped up and it created this P, it created the distribution balance bottom of that P at 370 on the NASDAQ. At that point, right, I'm just looking for more and more information to set up. I could easily not do anything because it's outside of balance and I could say, you know what, like it's fresh all-time highs, there's nothing really to do, I can just leave it alone. Or I can look at it and think, okay, what is the general information that's coming out? My one trade that I wanted to take was to buy the 240. That didn't pan out. Is there new information that comes out on the day itself? Okay, great. So we have the bottom band of the balance of the P and we have huge negative deltas stacking up. If there is a continuation in the trend, it's going to be from that spot. Win or loss, that's probably going to be the only trade of the day and walk away. So I really, really want to exercise patience. I watched the first hour and a half of the market, didn't do anything, reduced the size, took the one trade, and then walked away for the rest of the day. Right? Even that one trade, it was on a 15-point stop and it yielded about 50 points profit. So day by day, my size is very limited, as well as the frequency that I'm trading, and that's just about it. It also helps me really refine my system and my strategy and keep that patience for even when volatile days come in. I know, okay, XYZ is going to create the highest probability trade that I can possibly take based on my plan. So if you take anything away from this video, it's that summer is about discipline, not performance. It's about putting the reps in, keeping fresh, and really taking a massive step back with lower expectations. Go touch some grass. So you don't need to force trades. You don't need to chase trades. Your setup doesn't necessarily need to change. Your mindset does, and the way that you approach your execution does. And if you want a deeper breakdown of how I structure auction market theory and order flow, right, you can check out the link in the bio for a free PDF for an understanding of how I approach the markets with our trading system. Now, I want you guys to hit that like button, subscribe if you're not already subscribed, and comment down below what else do you want to see out of our videos, and I'll see you in the next one.